Semis today. Well, they're ugly. They're getting hit pretty hard. SMH having its worst week since March of 2020. A lot of that pressure today is coming from Broadcom. Joining me now is Kevin Simpson of Capital Wealth Planning. He's the founder and CEO. It's good to see you. You tried to hedge a little bit heading into both NVIDIA and Broadcom, right? Talk to me about the trades that you made going in.
Yeah, Scott, I think we had a good thesis last week that NVIDIA was going to be volatile. Option markets were indicating somewhere between a 9% move. You just never know if it's going to be up or down. It'd be a lot easier if you did. Same thing with Broadcom yesterday. Pretty heavy indication of an 8-9% move. So what we did yesterday with Broadcom is we wrote a covered call, only a 1-week expiration, so it'll expire next Friday. But the annualized premium that we brought in was 60%. Now, I realize that sounds crazy, and it's only because of the hyper volatility heading into earnings. But we brought in $1.73 yesterday. We wrote a covered call on Broadcom. Incidentally, when we did the NVIDIA call last week, we brought in $1.25. So we closed that out yesterday, wrote another Broadcom call. It brings in about $3 in premium for the past 2 weeks. Now, granted, the stock's down a lot more, but we were able to hedge 20% of today's decline with those two option trades just within the past 2 weeks. So it worked out well for NVIDIA. It's worked out well for Broadcom. The stocks are trending down, so I think we want to be a little bit patient before we add to them. But I think that you'll get a buying opportunity. And we're seeing prices, Scott, similar to where we did at the at the jobs report last month when we saw the massive sell-off. So I feel like that would be a good entry point for people to buy the dip for sure.
So you're more of in the buy this market rather than beware it.
Yeah, we didn't buy anything today. It was a short week. It's the first week where people are back after the holidays. You get a lot more volume. So we wanted things to settle out. We were also very concerned about what the jobs report would look like, remembering what happened last month. I thought the numbers were good on the jobs report. The market selling off, I think, is more of a growth issue than a recession issue. Whether the Fed's going to cut 25 basis points or 50, a lot of uncertainty in the market there. But I think the opportunities, Broadcom's already back to where it was on that August 5th, August 7th low. NVIDIA isn't, but certainly it's getting closer. And yeah, I would be a buyer of the dip, Scott, and we will be.
But I mean, as long as we continue to have this debate about where the economy's going, what the Fed is going to do, you maybe have to be more selective about what you're going to buy, don't you? In other words, the broadening story could get a little more difficult, no?
Well, I think active managers always want to be careful about what they're buying, but I think this type of volatility presents opportunities. And it's, 2023 was just a weird year because you could own these 7 names and they would just double every day and you didn't really have to think too hard. That stopped seemingly in October of last year when the Fed kind of called no mas on rate hikes. Now, granted, we've been in a pause for a while, but then all of a sudden you had to be a stock picker again. So what do you do when you see interest rates coming down because we're entering a declining cycle of rates? And that's why you're seeing REITs and utilities as probably the leaders right now. I'm a little surprised on financials. I'd expect them to perform a little bit better in the light of the fact that you've got interest rates coming down. Maybe it has something to do with Warren Buffett selling Bank of America. I'm not entirely sure. But yes, your point is spot on. You can't sit back, own 7 names and go to sleep. You've really got to pay attention and be nimble in this market or you'll miss it.
Kev, how are the next 60 days ahead of the election going to color the kind of decisions that you make in this market? Because the market's tunnel vision, right? It doesn't think about it till it has to. Well, now it kind of has to. We have a debate next week. The polling is going to be much more talked about than it has been.
Yeah, the election is going to be huge for volatility. We're seeing that in the VIX for sure. Monday, we've got Apple. Tuesday, we've got a presidential debate, to your point. Wednesday, we get CPI. And every day that gets closer to the election, there's more angst. I don't know that it has that much pressure on the overall market. If you've got some divisiveness within government, the stock markets can typically perform well regardless of whether you have a blue or a red White House. But I think that it's going to increase volatility absolutely for the next 60 days and maybe even into January. For us specifically, Scott, we'll continue to harvest that volatility by writing covered calls. I would encourage viewers and investors to try to follow suit there because when you have higher volatility, you have higher premium. What we saw with Avago Broadcom yesterday is 60% annualized premium. Yes, granted, that's pretty insane. But if you can generate another 3, 4, 5%, on top of whatever dividends you're generating, all that does is smooth out the ride for what we expect to be heightened volatility for the next 60 days and beyond.